Hello and welcome to another update video about Bitcoin. Well, very weak price action today, just sideways price action. We just see a little bit of a green candle there at the moment, but to be honest, there's not much really to update. Just want to give you a quick update about the microstructure on the Bitcoin chart. Let's talk about Bitcoin's short-term bullish as well as short-term bearish scenario here on the 30-minute chart, which I focus on in this video. However, both of these are part of an overall bullish case because we have seen 5 waves to the upside from this 23rd of January low. So we have 5 waves up. That typically indicates some bullishness, even if it breaks down eventually. But we have 5 wave move up, currently a corrective pullback. So it could indicate that we should see one more high at least, maybe more. If you're interested in getting a little bit more context about this and how it fits into the bigger picture, then feel free to check out my last video from today, in which I also covered the daily chart, the daily time frame. Then you get an idea of our primary and alternative scenario on the daily time frame. So, but here, looking at the shorter time frame, the 5 wave move up allowed me to add a support area to the chart. It is between 39,605 and 41,709, with additional support at 41,083 and 40,467. These are 4 Fibonacci levels, and they are relevant as support for a wave 2 pullback, or could be a wave B. So if it's a 1, 2, 3, 4, 5, or an A, B, C, you will not notice the difference most likely until we have that third wave complete, because if it's more bullish, it should also hold a wave 4, higher low, and generate a wave 5. Whereas if it's only an ABC structure, it will break below that support. They can always fail after 3 waves, which is why I know that a lot of Elliott Wave traders, they tend to take profit in the third wave, towards the end of a third wave, maybe even the third of a third wave. And then they just look for the next setup that offers a wave 3. Now here, support is very clear. I mean, a break below 39,605 likely leads to a reset of this larger degree fourth wave and leads to a failure of the setup, whereas the invalidation point of this long trade setup is down here at the swing low from the 23rd of January, which is at $38,515. Now, okay, let's talk about the short-term bearish scenario. In the short-term bearish case, the wave 1 obviously topped here on the 30th of January. That's, by the way, the case for both of these scenarios. And then the market moved down in an A wave. This now is some kind of a B wave rally, which could still stretch out. B waves can turn into triangles. A B wave can even extend higher, could even overshoot. Yeah, that's unfortunately all possible. And then we could still come down in a C wave. So that's sort of short-term bearish. I'm watching for another C wave to the downside into the support area. If it happens from here, it's likely going to reach sort of the area there between the 50% and the 61.8 Fib level, but it shows some short-term strength. So that takes us to the short-term bullish scenario. In the short-term bullish scenario, which becomes more likely with a break above yesterday's high, but will become even more likely with a break above 43,849. Well, we would be in the orange count. Okay, so what is that? That orange wave count means that the wave 2 likely bottomed here already, that we're already in the third wave or C wave to the upside. And I need to see some more evidence for that, however, like a breakout to the upside, as I mentioned. And in this scenario, then the price could reach 47,000 plus. Yeah, in this third wave or C wave. How do we determine that? Well, we use the Fibonacci extension tool. We take the length of that wave 1, a measure to the low of the last swing low, obviously here. And yeah, I mean, minimally 47,550 would be great. If it's a C wave, if it's a third wave, it should even go higher, because in a third wave, which is more bullish, we should see 49K at the very least. Yeah, this would be, let's say, minimum what I would like to see. But again, if the C wave comes down in our short-term bearish scenario, which I currently prefer slightly, but again, they are both part of the same scenario, then this target area would change a little bit. Okay, it would change. Yeah, that's basically what I'm watching at the moment. The white count or short-term bearish one is going to be confirmed with a break below 41,870, which is the 1st of February low. Why is that the case? Well, it's the case because then the orange count would be invalidated. And because we only have 3 waves up into yesterday's high, at least no clear 5 waves, I'm slightly leaning towards the white count. But both are part of the same scenario. In both, I'm looking for higher prices. That's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.